Real quick disclaimer for you guys. Take a moment and read that. I'll put it in the room. We're going to do some recording of the room. And again, look, guys, when we do trades, I always like to start with the objective. The objective for us, very, very simply, high probability trades. And we want to do 1 to 2, 3, 4 different high probability trades, and we want to make $400 a day. And we want you to simulate and practice these rules until you can guarantee yourself you can make 400 a day. And then once you can guarantee yourself you can do these trades, then fund a live account. And if for some reason you lose $1,250, stop trading live, reevaluate, and go back to simulator and figure it out. And the idea, it's very difficult. I just want you to know this. Look, going from simulator to real money is a really big mental jump. And if you do it without the utmost confidence in your trade setups, the minute you have a couple losers, you're going to be off the rails. If you've traded the same trade setup hundreds, thousands of times, then you're going to feel very, very comfortable. So, again, just to really simplify, our software and our fibs and everything else is geared towards giving you high probability trade setups when everything is going your way. Now, you have to take that big chart information down to the smaller charts, right? So, again, I want to just kind of reiterate, when you're reading through the rules for a high probability trend trade, we focus on the 14-2 chart first to give us big picture direction and areas. And then we focus on the 8-2 chart in the middle, and then we look for the trade on the 5-1 chart. So what I'm doing here, there's a program. Hang on. There's a program that we use. Jeremy Tang wrote the program, real nice guy. We worked with him for years. And what their product does, just to show you, it allows you to do visualization. And inside of NinjaTrader, you can write the logic, or not really write. You can take the logic, like, for example, these are our trend trade rules right here. So again, one of the rules for a trend trade for us is that our 14-2 chart, small triggers are crossed in our favor. And what this program does, it allows you to take that logic and plot the result of the 14-2 triggers crossed up or down. So if the 14-2 chart triggers are up, it'll paint the background green. And if the 14-2 chart triggers are down, it'll paint it red. Is everybody with me on that so far? So it gives you a visualization of the background color of the 14-2 triggers crossed up or down. Give me a little Y in the room if you're okay with that. You can go further with this program, and as I have, and this little template is in your installer for those of you guys that decide to try this out on your own. You can go a little further and you can do things like you can plot your 8-2 condition. So, one of the things that we talk about now, and I want to bring you back to the trading plan a couple of times, because when you're doing 5-1 trend trades, the 8-2 chart helps you define which ones to use. So let me give you the chart from the trading plan. The 8-2 trigger line reading, when the small triggers are really strong above the 8-2 large triggers, you can really take long trades. And if the small triggers get on the wrong side of the 8-2 large triggers, it's going to go a lot further the other way. And then when the small triggers get back above the 8-2 large triggers, it's going to be easier trades. So what I've done in this scenario is I've automated or visualized this process. So let me show you. right here, this is the 8-2 small triggers above the large triggers or below the large triggers, or the 8-2 triggers crossed up. And what it will do is it will give you the visualization of one of these things. So look, I'll just show you one of them first. So whenever and I've superimposed the 8-2 small triggers over the 8-2 large triggers on the 5-1 chart. And again, this is just kind of a visualization tool. Obviously, it's not the way our charts are set up exactly, but for us, the easier trend trades, and again, let me go through trend trade rules with you real quick. Trend trade rules, and again, if you don't know the rules, obviously, then it's really important that you go watch the trend trade video on our, this trend trade video on the education page goes to the rules. So again, there's a lot of material that you guys can use, but I'm going to give you the short version of the rules on here. Triggers say it's okay. Number 2, nothing in the way. Number 3, pull back in price to mid-band or fibs. And then number 4, the fib to fib oscillator is at the upper or lower 25%. So for us, a trend trade would be favorable triggers, pull back to a mid-band, the fib to fib oscillator at the 25 down here, and that would be all of the rules necessary for a trend trade long. Is everybody okay with that? Again, you can go watch that video and it goes through, 100 different versions of this. But for this purpose, I just want you to have the basics in place. You have to have a support area with the right triggers, with the right direction, with the right fib to fib oscillator. Now, what I've done with this little simulation thing here, or this visualization program, is I've put together all of these pieces. So, and we're going to do it with just the 8 triggers first, because, we've done a lot of lessons to this effect over the last, couple days, where we use the 8-2 triggers for 5-1 trend trades. And more specifically, this was, day before yesterday. And what I was trying to get you guys to visualize is the strong push, where the triggers are, and then one trend trade short. And then the strong push and one pullback for a trend trade long and a trend trade long, and then a strong push. So what I've done is I've taken this 8-2 trigger and I've superimposed it, number 1, the rules for the triggers. Number 2, look, the fib to fib values are right here. So if the fib to fib for longs or shorts is true, and you get a reversal bar. So what you're able to do is you're able to basically visualize or stitch together the rules for a trend trade for, you can always visualize them, but this does it. It visualizes them for you. So does everybody understand where we're at? We're going to take our 8-2 condition for our triggers, plus we're going to take the fib to fib oscillator getting into a retracement zone. And then, forget about the areas for now. We'll go look at the areas on the chart. And then we'll take a reversal bar as true. And then what we want to do is we want to then, and when you make a reversal bar true, it becomes a 1-bar event. Okay? This is not a trading system you're going to go trade. It's a visualization tool. So watch. I'm going to stitch all those together, and then we're going to see where all of the triggers are okay, where the fib to fib oscillator went down, and then we had a retracement. And it's going to plot for you a stripe where the rules are true for a trend trade with the exception of the mid-band or fib. Does everybody understand this? And again, look, if there's no mid-band or fib, it's not going to be a trade, obviously, but it'll still be a trade on this thing. So it's a visualization tool that will allow you to go back and see where the 8-2 triggers were, and again, I plotted the triggers on here so you don't have to use your imagination. And again, when you go back, these are the ones that we talked about over the course of the last few days. Does everybody understand where we're at so far? We're going to visualize when the high probability trend trade rules are true. When the 8-2 triggers say it's okay, when the Fib to Fib oscillator says it's okay, and then when a reversal bar says it's okay. And look, I want to give you guys, the other thing that they have is they have a little testing program and a strategy. It's called Raven. And again, you'll see the influence. So look, what I've done is I've taken this little template, the 5-1 trend trade template. So these little stripes that we have on here, and I put together, again, this is hypothetical stuff, backtesting stuff. But look, 10 tick stop loss, 20 tick profit target. Just trail the stop behind it tick for tick. Really simple. Everybody okay with that? What this thing does is it will go through and it will show us historically where all those trades were. And again, I've got the lawyers poke me, and look, you've got to go through and you got to have the old disclaimer. Again, look, these are not real results. These are just simulated backtesting stuff, but not to freak anybody out. Okay? Read that. You'll be good. So it takes this little visualization program and it says, if there was a trend trade rule true, then to take a trade. So again, it's back testing. The only thing that's guaranteed with an automated system is that you will get a fill on the loser, but you're not guaranteed a fill on the winner. And that's why, you can't just use it as an automated strategy. But I want you to see some historical performance over the course of a month with no areas, with no proper management. Just as is when the Fib to Fib oscillator is in the right spot, when the triggers are correct on the 8-2 chart, it's 56% winners by itself and $8,300 for the month. That's not bad. And that the average winner is 3 times the average loser. Would you guys all be happy with that type of performance in your life? I mean, if you could take 2 contracts and every month make $8,000, would you be happy? Now, all of you that haven't done it say yes. Everybody who's had our software says no, this would be underperforming. So let's go through and let's take a look at, again, look, let's take a look at the last couple days, or I'll just scroll it back and we can look at anything you want. The other part of this, think about the historical performance. Everybody said that they would love that historical performance. Now we're going to go through and talk about some questions. Would you go long coming off of the edge of resistance without any trigger lines breaking through? Yes or no? Would you take a long trade? Right? So this is already one loser you could eliminate right there. Think about that for a second. As you scroll forward, and this is the other problem with that system. For some reason, it, coming off of resistance with a divergence pivot stop out, this is one you would take. Right? The system missed it for some reason. There's bugs in it. I don't know why it doesn't catch every one, but. And then, again, once you come off of support, and again, a lot of this is going to depend on your, your larger charts, which we're not going to talk about right now. I want you guys to see trend trade rules in your brain. I want you to see the trigger line configuration from the 8-2 chart that's going to create an opportunity for you to win. Can you guys see the triggers? Again, we talk about it on the other charts, a lot. I talk about this trigger line configuration. This is what it looks like to us. You have to be able to visualize the correct triggers that are going to make you win long trades or short trades over and over and over and over. Look, this is that same spot. Do you see the look? Again, when you take that same spot that we wrote the rules on before you even get the mid band or the fibs or anything else, look at the trigger line configuration. This is the key to you guys doing winning trade after winning trade after winning trade after winning trade. This is why I ask you guys to annotate your charts and to write the rules on your chart. When you do a trade on your chart, I want you to write these words literally. I want you to hit F12 in NinjaTrader and copy paste high probability 5-1 trend trade. Because when you really understand that you must have this trigger line look on your 14-2 chart or 8-2 chart, when you get the look of the triggers, you can't do the wrong trade. You'll feel very comfortable doing the same trade over and over and over again. All right, let's look at some going forward. You ready? Let's just assume you're going to take all these trades if it's from an area. How about the management of trades? You guys said you'd be happy with the $8,000, but look, triggers are up, mid bands are holding, and it hits Fibonacci resistance. Is this the best exit for a trade? Just in this one chart in a vacuum. Is that the best trade exit? Knowing what you know? Of course not. It's better to exit at Fibonacci resistance with divergence, not on the way back down. Before I go further, do you guys have questions about this? And again, this is just a visualization tool to show you when the 8-2 triggers are right, the fib to fib oscillator is right, and then you have a reversal bar. Everybody understand all that? All right, let's go forward. Let's just talk about trades. Okay? Trend trade short. Let's say you were going to do this trend trade short, which you probably wouldn't. What's the other portion of a trend trade short, guys? It has to be from an area. Remember what I was talking to just a little while ago when we were looking at Chris's trade. The idea is to sell when the market's going up into resistance when the conditions are true. So just look at where the fill is. The fill is 5 ticks away from the area. And again, the same thing here. Would you go short into support? Probably not, right? And if you did go short, being short at the mid band is better and being out at the fibs is better for management. Now, as this progresses, look at how this is, playing out. This is a trade that, 99 times out of 100, you would take this trade for sure. Agreed? If you break a lot of support and you pull back to resistance, you're going to do this trade. Where you get into your trend trades is going to be vitally important because it's going to determine how much money you make and how much money you lose. So again, I want you to kind of see this look going forward. Look at the right edge of my chart. See how this area going short on the way up into that area is the best way to do it? This is one of those situations where, again, I go back to the trading plan over and over and over. When you have the number one look on all of your charts. And again, you have to understand what the number one look is. The 14-2 chart has a really strong trigger up, or the 14-2 chart has a strong small trigger down transition look. The look is always the same, guys. The small triggers have to be strong up or down on a large chart. And then when the 8-2 chart, when you have this look and this look, you're going to do a trade. Now, where you get in is going to be very important, right? Getting in close to the area, if it's perfect, is a good idea because your stop, in the real world is going to go in after you put in a down bar. And this trade wouldn't have won anyway. It doesn't matter. But it would have been a smaller loser. All right. Now, this is a trade where the system didn't pick up the signal because the other trigger was crossed down. But this is one, look, is it pretty obvious? Triggers are up, mid bands and fibs. That's going to be a trade you're going to end up doing. All right, so again, I want you to go into this knowing that this thing doesn't even pick up all of the good trades. It's just picking up some of them. All right, one more time. Sai, this is in response to what you were saying the other day. It didn't pull back to a support area, did it? So again, all of the rules in this little simulator are true with the exception of the area, because we're just going to go through and look at the areas. Now again, you'll see, the rules were true here, and it took a loser. I mean, again, we're not going to beat up the trades too bad. I just want you guys to kind of see. The rules were true, and this is why we don't use this darn thing. The system didn't pick up the trade for some reason. I don't know why. I have no explanation. It's a great visualization tool, but that's why we don't use it anymore. Because it's really inconsistent with what we're doing. Great for visualization, though. Do you guys see the short trade? Triggers going down. And again, I like to superimpose the 8-2 on here because it's really helpful to see the 8-2 condition that helps with the 14-2 chart. And again, I don't know why it didn't pick up the first one, but it picked up the second one. Do you guys understand this trigger line look? And again, I superimposed it on a 5 chart. But I want you guys to be able to see it on the 8-2 chart by itself so you know when you can do high probability trend trades. And again, that's why we got into this morning, this is the real world right here. And somebody was saying that they were doing a trend trade long right here. And when you look at the trigger lines, you can see how that wasn't the right trade to do, to go long there. To go long when all the trigger lines are going up is really what we're looking for, guys. So again, I want you guys to see the visual because I think, for newer users, sometimes it gets lost that, number one, there's not that many trades. When you scroll back out and you look at this thing in totality, there's only a couple of trades in any 5-hour period. And it's really waiting for those high probability looks where the large chart, the small chart, everything really comes together. And even with this thing not doing it right, the opportunity was there for, oh man, I hit the wrong button. All of these high probability trades. So I want for you guys that are new to think about 3 things. When you're doing trend trades first, I want you to focus on your trigger lines on the 14-2 chart. Focusing on the correct trigger line look is going to be number 1 rule. Number 2, okay, we do not want to trade into support going short. If we hit fibs or support or resistance and 4 trigger lines are not breaking above or below, then we're not going to take a trade short. So even if the trigger lines are going down, the 14.2 chart areas are going to stop us from doing a trade. Does everybody understand that? So we're using the 14.2 chart to know when we break out of areas and when we're going to keep going up and when we're going to stop going down. You know, and look, every area is going to break eventually. So, you know, you may initially get to an area and say, I'm not going to go short, but if it breaks and 4 triggers get past it, then you will go short. So look, let's look at the real world and just kind of tie this together. So again, the trigger line configuration here, guys, does it look pretty simple? Obviously, for trend trades, when the market's going up, key. When the market's trending down, obviously, we get the opportunity for shorts. Some of you guys went short, you said. Let me build back in my 14.2 chart and put all the indicators back on here. So this is what you're going to end up with on your 14.2 chart. And again, you're not going to get all of the trades all the time. So what we're going to look at is we're going to look at our current trigger line configuration first. Do we have a strong down trigger line configuration? The answer is yes. So we have to ask ourselves the second question. So watch, this is the way your trade's set up. 1, strong trigger configuration. Number 2, have we, how about not we? So this is where we're at right now. Yes, we have a strong trigger line configuration, but we've hit support. And anytime you hit support, you have to be cautious if the trigger lines aren't breaking support. This will tell you that you can't do short trades anymore, and that support will probably bounce back up. So, you know, again, look, let's just go on. Can we go on some assumptions? Let's say this support wasn't here, okay? So I'm going to just kind of super clean the market here real quick. If this support wasn't here, this would be our number 1 trigger line look. It still is our number 1 trigger line look. Right? The number 1 trigger line look says that all 3 triggers are crossed down. So this trigger's crossed down, this trigger's crossed down, and this trigger line is crossed down. And when we get the number 1 look, what we're looking for is some type of retracement back to resistance to go short. Does everybody understand that? Let me show you the exact same thing in reverse over here. This is yesterday, but still. This is the number 1 trigger line look going up. All 3 triggers are going up, and the small triggers are physically above. So with this look, you would be looking for some type of a pullback to take a long position. And again, the number 1 look doesn't pop up all the time. You're going to get a transition look first where the small triggers are breaking above the synthetic triggers. Then you're going to get a number 1 look. And then eventually you're going to get a weakening look where the small triggers are physically inside of the other triggers. And this is the type of look that will usually make the market start to go the other way. Let me show you where this is at in the plan. The number 1 strong trigger line look And again, look, I like to put names and pictures to everything, okay? So when we look at this chart, there's three different looks. The first one is strong small triggers down, transitioning below all of the other triggers, and we can do a short trade. The second look is the number one look, and that's all three triggers are crossed down, and the small triggers down and below, and we're going to for sure do a trade. And then the third look is what we call a weakening look, but the small triggers are all down, but the small triggers are physically inside of the other triggers. And this is the type of look that could cause change. And then you can see the same thing in reverse. Strong triggers up, all three of them up. That's our number one look. And then strong, they're inside. We're still going to do longs, but we're going to pay attention for reversals. So again, when you look at this, this is where we had three different versions of our triggers over the last, 12 hours. Over here, we had a transition. And transition is nothing more than the small triggers going up strong above the large triggers. You see it? Sometimes you get a trade, sometimes you don't. We're just talking about trigger line looks. And then you get a number one trigger line look where all three are going up and you for sure get a trade. And then you get the weakening look. And that's where the small triggers are inside of the others. And usually that's where you get a reversal. When you get a down bar there, you get a reversal in the trend for a little bit. Is everybody okay with this? And again, if we get a strong trigger line look and it keeps going up, we want to keep finding long trades if possible on the smaller chart. So there's three phases. You have to have the right trigger line look. And then second, in the plan, everybody with me? The right look for the triggers. And then you have to make sure that nothing is lowering our probability of winning. Well, what does that mean? Well, it just basically means that there's looks that will cause you to not be able to do trend trades on the 14-2 chart. The first one of this, I'll start over here. The first look is you run smack dab into support or resistance. I mean, at support, we don't want to go short anymore. At resistance, we don't want to go long anymore. That should make pretty good sense, right? Now, like I said, eventually every support or resistance is going to break. So we want to have a rule that we know when to keep going and when to stop. If four trigger lines get beyond any support or resistance, we can keep taking trades in the trend direction. If we reach support or resistance price-wise and four triggers don't break below it, the market will usually hold that support and go the other way. Those are the times where we want to do counter trend trades on the little chart. So again, we have to kind of determine, and you'll get both. You'll get a transition look going down where you'll get one short down to support, and then you have to stop. And then if you have conditions for a long trade here, you can take a long trade, which we haven't got to that yet, but so again, it's recognizing the correct triggers for trend trades. And then look, ultimately for you guys, when you have an edge or a top or a bottom that's supposed to hold, which means what? Again, the same things that stop a trend trade are the same reasons why we do tops and bottom trades. And the top and bottom trade itself is very simple. There's only one look that we're teaching you that you're going to use to enter at the top or enter at the bottom, assuming it's the bright spot on your 14-2 chart. And it's the same look over and over the exact same way every single time. You're going to have divergence, which is this little negative number. Doesn't matter what the number is as long as it's there, which is going to create a little magenta line going across. When you retest it, you're going short. Or if you're at a, again, keep in mind, you have to be at a spot like this on your chart where you have to hit a major area that there's no way in the world that the trigger lines are going to get past it. Then you can take a long trade down here like this. You guys understand that? So you have to be able to read your areas and read your trigger lines and know, yes, I should take a trend trade. Okay, I should stop doing trend trades. Now I can do a counter trend trade. Now I can do trend trades. Now I can't do any more trend trades because I hit an area, but I can do a counter trend trade. And it's a rhythm, of reading your fibs, reading your triggers, reading your fibs, reading your triggers, and putting the different charts together. I guess my automated system did a signal. I forgot to turn it off. So, look at what this looks like. So look, this is simulator with an automated signal. So it did a trend trade, short. Now, do you remember what our problem was with doing a trend trade short? This is a very graphic look right here. The reason we couldn't, or weren't going to be as successful with a trend trade short, potentially, is because we hit a bunch of Fibonacci support and we didn't get through it. So this is, granted it's maybe fortuitous. Do you guys see it? This is the rules for a trend trade short from your midband. But we hit these fibs, which we were getting to. So if you hit fibs and you don't have 4 triggers beyond the fibs, you will lose your short trades. You guys understand this? Again, I was getting back to that in just a second, but this is about as graphic of a visual as I can give you right now. So watch, let me pull back the 14.2 chart here real quick. Let me revamp this whole thing. Watch, I'm going to put all my indicators back on like they're supposed to be, and then we're going to talk about it again, and you'll see, I guess it just got stopped out. But watch how the rule comes back into play. So this is what you're seeing on your small chart, but again, now it's really graphic. Hit fibs and not 4 triggers below the fibs. So stop doing 5-1 trend trades. This is the rule. So look, when you're looking at your chart, again, I want to relate everything that I do back to the rules for you guys, because again, when you're going to do a trade, a high probability trend trade, it's imperative that you don't hit fibs without 4 triggers breaking below, or you're going to lose. And this is what it looks like on your chart. And more importantly, look, this is what it looks like on your little chart. Very graphic, isn't it? I love the real world because, look, the real world just proved my point. Very graphically, and technically, that's pretty much what we look for a long trade, counter trend trade, but we won't go there. Right? Our counter trend trade rules say we want a divergence, which is this little negative number right here, right? And then we want to pivot stop out of that divergence, which would mean, we'd put a limit order. Can't do it here with this thing, but we'd put a limit order to go long right there. So I want you to think about something for a second. We hit an area that we cannot do any more shorts against or we're going to lose, which we just proved, right? And since we can't do shorts, we have to ask ourselves a question. Can we do long trades from a support that you can't do a short trade from? You see how that works? So you end up with no short loss if you're following the rules, hopefully. And again, I'll just let them go. We can talk about them all as they go. So look, as you work your way back here, and again, look, this should be pretty obvious, right? When all the triggers are going up, we want to have long trade, long trade, long trade, long trade till the cows come home. It's obvious after the fact, right? But, again, the rules that we have in place have been in place for 15 years, basically. Trading with the trend on a pullback. And the idea is, how do we recognize when we should do it? And more importantly, one of the biggest things that our software provides is a really, 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 really favorable roadmap for when to stop taking trades. Because I think everybody can recognize the market going up or down. Without multiple time frame Fibonacci, you don't always have the ability to see when to stop. And, again, look, when the market comes down here and retests this area like this is going to be the look that either, it's either going to break or it's going to reverse. Can you guys see that? And again, look, I want to go through a couple more rules because I don't want you guys counter trend trading just yet. There's a reason why, and it's rule based, but we'll talk about it in a minute. If we weren't in a number one trigger line look down, this is your long trade right here. That's your fill on the way down. Right there. That would be your long trade. Now, it's not a long trade right now because of one reason, but you guys see it? That's literally the reason. Perfect counter trend trade long look on the small chart at least. Now, it may or may not follow through because of the strength on the big chart. We'll have to see. This thing's on an automatic trail, so I can't do anything with it. But, realistically, your stop is, this thing's not going to allow me to do it, but realistically, your stop is down here below the pivot. So let's recap. No more shorts on the 5-1 chart when fibs hold on the other charts, which is pretty graphic. You can see it here. Because you're going to end up losing that trade probably 75% of the time. And again, nobody wants to lose 75% of the time. We want the 75% winners, not the 75% losers. So, what we're looking for ideally is, a trend trade from support with nothing in the way until we get to the next resistance. And, again, this is, it's kind of nice that the market's doing this here, but do you guys understand all of this? Again, this is a mini microcosm of everything that we do, all wrapped into one little fun spot right here. Very graphic, isn't it? And again, look, when we look at it on our normal charts, this is what it looks like. This thing's not going to allow me to mess with it. Knowing when to quit is more than half the battle. And again, you got to think about these types of situations. When you can't go short, the question is, can you go long? If you can't go short, can you go long? And again, this is our normal chart configuration. Look at the difference over here, guys. Sai, you were asking this question earlier about a strong market. Look right here where everything on the planet is going down and you have multiple fibs and nothing in your way until you get down to support. You see the visual on that? I don't think that's going to stay in, but the visual over here is really, really, really obvious that there's nothing in the way. And then, you know, obviously the visual that we hit fibs and triggers didn't break below is going to eliminate, you know, high probability shorts. And, you know, again, this isn't the highest probability long trade, but it's a nice graphic example of a pivot stop out. Getting the divergence prior, which is these negative numbers, pivot stop out, going long on the way below it, which is scary, but again, you're not going to get the best out of a trade unless you can get in at a spot. So if you can get in at a bunch of fibs going short and get out at the fib, you make all the money. And then you skip shorts because you're not supposed to do shorts anymore. And then you get a long, and then this will probably go back up again. I would imagine we're going to get back from support to resistance, usually. Now, the thing that's against this trade, and I'll, you know, again, we normally don't do counter trend trades against a number one trigger line look. I know we just did, but normally we don't do it. Because when we have this trigger line look on the 14.2, it's 50-50 if it really goes up or not. You guys understand that? And again, we'll probably, you know, we're going to bounce, but it'll probably continue lower from resistance after a bounce because of the trigger line look. All right, questions about this, because I think this is a real good graphic example of, you know, what we do and how we do it. The big chart trigger line configuration and areas are very important. But ultimately, you're not trading on the big chart. You have to go down to the small chart to get your trades. And again, look, you can see the same, you know, this is a pivot stop out short up here. Divergence, little pivot stop out at the edge of fibs. Basically, this is the same thing in reverse. This is the one with the trend, though. This is the one against the trend. So, look at the trigger line configuration from the 8-2 chart. Well, let me try to do it this way. Trying to give you guys the best lesson here. Look at the trigger line configuration just on the 8-2 chart. Forget about anything else, okay? Over here, where I was telling you we had a really favorable 5-1 look for shorts. So again, I want you to visualize this for a second. Very favorable 5-1 Fibonacci short area. So you have to ask yourself, is it going to work? The question of if your trade is going to work or not is answered by the trigger lines. So again, look at the trigger line configuration here and then ask yourself if this is going to work. You see how the two of them go together? And again, we didn't quite get our fit to fib oscillator up to the right spot, but it sure was pretty. Deepak, you were short and got out at 12, you said? Cool. Nice job. And again, I want you guys to see it because, you know, again, this is really, really, really stereotypical bottom look. And then look, we're going to probably have stereotypical top look up here too. We'll see. And whichever one of these two areas breaks, whether it's, you know, look, multiple time frame resistance with a pivot stop out up here. If that holds, then, you know, this long trade is going to also, look, you'll get the long and you'll also get a short because you're stuck in between two areas. And the trend is overall down. So, again, look, this is where the next trade, what's going to happen next? Right? If you hit a fib and 4 triggers don't break it, then it usually holds. If you hit fibs and the triggers break it, it usually holds resistance. Let me show you one of our older, you know, more simplified pictures. This picture is from July of 2015. So the picture is almost 4 years old, but the concept is really, really, really good. When we look at our trigger lines versus our fibs, when we hit a fib, if the triggers don't break it, we usually, after a pivot stop out or double top, double bottom, will hold the fib and we can do counter trend trades. You see that? I mean, this is 2015, but it's a super simplified version of fibs and trigger line reading. If we hit a fib or price hits a fib and triggers don't break it, on the pivot stomp out, it usually goes back up to the next resistance. Now, if it gets to resistance and the trigger lines break it a little bit because they're strong, we have to wait. And wait is one of the 4-letter words that day traders hate. They don't like to wait. But we want high probability. And for us, our Fibonacci areas are best when the trigger lines are on the correct side, not breaking above the resistance. So we can anticipate down here that the pivot stop out is going to work before it ever works because of what happened with the triggers. Over here, we have to wait for the retest and failure, and then we know it's going to work because the triggers are below. You guys see that? You'll use this a lot with what you're doing with us. And then ultimately, this is the one that gets most people in trouble. You can't buy a blue fib when you have super strong triggers into it. You will get run over. So the number one mistake that most traders make is that they try to buy when there's too much strength into an area. When it's strong into an area, you have to wait and you have to get confirmation, then you can use the area. Because if you don't get confirmation, the area is going to break. And again, when it breaks, it becomes really useful to us. Anytime a fib area breaks, it usually will be retested as resistance, and then that'll be our next trade. I want you to think about this for a second. If the market's really strong and breaks a blue fib, it will become resistance and we'll use it for a trade. And then look, this is the same logic. Really strong triggers into a blue fib, the triggers get below it. If they never get back above the blue fib, it will break and then we can use the resistance to trade lower. Think about that logic for a second. If the triggers break and the fibs turn red, the idea is that we're going to make it down to the fibs. If the fibs hold support and the triggers don't break below it, the pivot stop out will usually take us back up. Can you see it? And it's basically all of the same concepts in this one super simple picture. Pivot stop out at fibs, no triggers break, and it's going to go up. It's going to retest the resistance. We'll see what happens. Any support or resistance that breaks is going to then tell you it's okay to continue with the trend. That's the short version of everything we do right there. So when you look at the market right now, we have, again, two areas. Obviously, this support area is very serious, and this resistance area is very serious. This is normally where we start taking a break. When you get in between support and resistance, there's only two choices that you can do. We already declared that we can't do trend trades anymore. Right? Remember what we said? If we hit fibs and the triggers don't break, we're not doing trend trade shorts. Now, we could do a counter long, right? If it fits the bill. Let me show you one more thing. Do you remember on that little picture at the top? I want you to see an instance of this in reverse. Small triggers get a little beyond the area, then small triggers get below the resistance, and then the resistance holds. This is the same pattern right here. Small triggers get a little below the support. Small triggers get back above. When it retests the support, where are the small triggers the second time? They're considerably above the support. Did anybody go long there? I'm just curious. The first time or the second time? Marco, you went long on the second time, okay? And again, look, it's not real magic. It's just, look, you have to have rules for reading your fibs and reading your triggers. And without even knowing the trading rules, you need to have an obvious look. Obviously support or obviously resistance and obvious triggers, and then you get easy high probability trades. When you go to the 8-2 chart, again, we don't ever want to go counter trend against this look over here. We want to do trend trades when the triggers look like that with the trend. When the triggers don't look like that, like right here, we have a better chance of going against the trend. All right, questions? And again, you're going to get this same pattern over and over and over and over where, again, you can go back and study this 9 ways to Sunday, but it's always the same. You're going to transition on your larger chart, and then at some point you're going to have a number one trigger line look on your large chart. And then you're going to eventually have a weakening look that will eventually get your triggers to roll out. And then you'll have short trades, short trades, short trades until you hit fibs. And then they have to, rework themselves out, and you have to trade with the trigger lines. All right. Anybody have questions? And again, look, you can see the obviousness of the trigger lines here, can't you? Well, that's not 100% true, David. What the plan says, let's go through the plan again just to review the picture, okay? So when we're looking at the plan for trend trades and we look at the 8-2 chart, what it says is that if the small triggers are really strong, small to large on the 8-2, you're going to get a very shallow retracement which means you need to be more assertive on the small chart on your entry. If the small triggers weaken on the 8-2 chart and get below, it's not that you'll never go up again, but you're going to get a deeper retracement, which means you don't look for shallow pullbacks anymore. So you're basically using the 8-2 chart as a gauge for how deep it's going to pull back. And it takes some getting used to, but once you see that the 8-2 chart is too strong, you're not going to get deep pullbacks. You can then be more assertive with your entries on the 5-1 chart. Well, yeah. Assuming that there's not anything against you on the big chart, David. If there's something against you on the big chart that says don't go short, you can't go short. Or don't go long, you can't go long. So for high probability trades, you have to think 3 pieces. 14-2 chart agrees or doesn't disagree. And then the 8-2 chart really agrees or says, well, we're going to go a little deeper. And then ultimately you have the 5-1 chart rules where you go down to your 5-1 chart and get your trade. Where did my 5-1 chart go? Because the trading happens on the small chart. But you have to be able to go in and predict the probability of any small chart area holding or breaking based on the 14-2 chart areas and triggers and the 8-2 triggers. And again, the trend is down overall on the big chart. Agreed? 14-2 chart. Let me just delete off some of this stuff. So, again, going long is not really, you guys took some longs, but you have to be able to anticipate, when you look at your chart, how much am I going to make on a long trade with this look? So can you accurately and convincingly and consistently say how much you're going to make on a long trade with this trigger line configuration? How much are you going to make? Are you going to make 100 ticks long with this trigger line look? Probably not. Which brings me to my next point, which is the trigger line looks, not only are they used for when to do trend trades, right? And when to do trend trades, when to stop trend trades. They're also, the trigger line looks are when you're supposed to trade at the tops or bottoms. And the trigger line looks are also dependent on your entry logic. So look what the entry logic says. If the strong trigger line look is on both of your charts and you have a 5-1 area, it's best to just put a limit order at the spot to get in. Let me give you an example of that, or you guys saw an example of that with somebody else's chart this morning. And this is why we go through charts and we do pictures and we talk about things, okay? When, you look at this chart and whoever it was that posted it, doesn't matter, said, I was doing a trend trade long. And when you see now with the trigger lines, with the little conversation we just had about the trigger line reading, watch, here's the picture. The obviousness of that trade not being correct is easy to see, isn't it? This is not a trend trade long. And it's a very, very strong 8-2 and 14-2 trigger down, which remember what we said about strong triggers into an area? You need to wait because it might break. And anytime you have a strong trigger into an area, you have to wait. And if you have a trigger that gets past an area, you have to wait for the color to break or the trigger to get back above. Keep you out of a lot of trouble. So again, look, you can see when you make a mistake, you're like, so watch, not only did you get long into strong triggers, but because you had gone long and you were hoping that things were going to turn around for you, you got the double whammy. Not only did you take a long loss, again, look, this is how we learn. So not only did you take the long loss right here, you really missed the opportunity with every fib and trigger line right here that would have made you 20 ticks. So it's a double whammy. You lose 10, but you don't make 20 because you were so, oh my God, I hate this thing and I'm so mad and I was wrong, that you fail to turn around and accurately and consistently do the right thing. So it's a double whammy. Because had you taken the 10 tick loss but taken the 20 tick win, you'd still be up money. But because you were stung from doing the wrong thing, you weren't able to do the right thing. So, when you make a mistake, sometimes it's compounded. So here's another one from, this morning that somebody posted in. And again, look, this is the reason why it's imperative that even though it's embarrassing, you put your triggers in, you put your charts in here. Because look at the obviousness of this trade. Now that we've done this trigger line lesson, and I told you I was going to fix you, look at this picture over here. So between the 14-2 chart going up strong with 4 triggers passed and the 8-2 chart triggers, doesn't the rule say if you have both charts going really, really strong, put a limit order at the area to get long or short? So when you look at this picture, wouldn't the right trade be put a limit order at the blue lines and hope it goes up? You see that? Based on all the triggers and fibs. And then look what happened in the real world. This trader bought on the way up and put their stop at the fibs. So they got stopped out where they should have been going long. And, this is execution management that's wrong, and trade the rules aren't met for the right trade, and they end up buying on the breakout and getting stopped on the pullback and missing the money. So again, it's another case of doing the wrong trade under the right circumstances, but mis-executing, and you lost money, or this trader lost money versus making all of the money. And again, this is why it's imperative that you label your trades, right? Write on there what you did right, write on there what you did wrong. Label your trades as either a trend trade or an edge trade. And then that way, when you go back and you look at the label, you can go, oh man, that's not a trend trade. It's obvious after the fact. All right. Now, like I said, how much are you going to make on a long trade with this look of the triggers? And that's why we don't necessarily counter trend trade against a strong trigger line look. Because this is what you end up with. I mean, granted, it did bounce a little bit, which is cute. But you can see that you're not going to make a lot of money when you have the large chart trending down. Can you guys see the next trade? Without even me pointing it out to you, can you see the next trade? I'll give you the trade from 2015. This is your next trade. Granted, this was in 2015, but 4 years later, it's still the same thing. hopefully it pulls back up into resistance. So look, now you have to go through and you have to look at all of your charts. Does your 14-2 chart suggest that you should do that trade on your little chart? All right, let me look at some other pictures here that you guys put in. And again, look, this is imperative that you guys post your charts, post your pictures, and get feedback to make sure you're doing these things right. So Stan, let me see what you did here. All of your triggers are going down. You took a short trade. And again, look, you were doing that into a lot of support. And again, you've had software long enough. I don't worry about you too much. So again, you went short with the triggers going down on most of your charts and obviously looking for more. Nice job. Again, you guys can do the same thing, you know. Every chart, you can have the same thing. Every market, every chart, you could pull up Bitcoin right now and you'd start to see the same exact patterns. This is why we use this bar structure. This is the gold market right here. You can't tell if it's gold, or you can't tell if it's Bitcoin, or you can't tell if it's crude oil or anything else, can you? All you should be able to see is trigger line, trigger line, trigger line, and you should know what's going to happen next. You guys understand that? You should be able to see fib area, and then you should be able to see trigger lines, and you should know what's going to happen next based on reading your fibs and triggers. And the same thing here on your 14-2 crude oil chart. What's going to happen next? If we pull back, are we going to see a short trade? This is what it looks like on your small chart. Obvious? If it's obvious, those are the ones you want. What's the target for any short trade? Well, the target's down here. Sal, let me take a look at your chart. You went short on a market with a pivot stop out after divergence. Yeah, I mean, look. Yeah, look, the 14. So again, this is crude oil. I can see that. But the 14-2 chart agreed, right? You had a pivot stop out on your other chart, which is right. And now here's the I guess the worst part of it all. Why would you only take $60? So I think your read of the 14-2 chart was correct, and the areas on your little chart was correct. I question, why did you put all that risk in there and only make $60? If you're going to put yourself at risk, you want to make 20 ticks. I mean, you can still take 10 or 15, but, the idea is to make 20 ticks. Well, the rules say don't stare at your small charts or it's going to scare you out. So again, let me ask you guys a question, just on a simple look. What does the 8-2 chart say about the depth of your retracement here? Does the 8-2 chart suggest you should get in at the spot or that you should wait? A shallow retracement? All right. You guys see why they're saying that? Strong small triggers down, strong large triggers down. Which means what? When you get to your 5-1 chart, your entry is going to be right there. It shouldn't go much higher than from 9 to 12. I mean, that's it. From 09 to 12, it's a 3-tick window. Right there is your short. Does everybody understand that? So your rules are the triggers are strong down, the 8-2 agrees, the fib to fib oscillator is up here at the 20 or the 75, and you now have a 3-tick window from which to do a trade. From 9 to 12, give or take. And again, I want you guys to think about one more thing. Just because you have a trade set up, you're not going to win them all. You know what I mean? You can have a super high probability trade. I want you to think about something for a second. This is why this is so important. You need to do the same trade, the same way, the same time, the same everything. So that way you're not gambling. And when you do 100 of these, and again, look, this is where the rubber is going to meet the road with you guys. When you do 100 trades and you take a picture of your trade every single time, and you go back and you analyze every single trade you took, where you took it, why you took it, when did you get in, where did you get out, if you're doing the same look with the same chart, with the same everything, if something's off by a little bit, you can always fix it. Do you guys understand that? If you do random different stuff every time, right? And again, look, to do 75% winners, you got to lose 1 out of 4 trades. And this might be it. Usually first day of a new contract and news spikes are notorious, but if you lose it, it's okay. You have to be able to go back and say, I did the same trade with the same look, the same way, and again, you're going to lose sometimes. Granted, I might have got the high tick right there. It's cute, but how did you get in? Why did you get in? Could you have done something better? Was it the right thing to do? Is there anything that you could have done better? Let me put all of my pieces back together here real quick. Again, look, if they overrun sometimes and they stop you out, we haven't got into this all the way, but I hope I didn't get the high tick. Let me put my templates back on here for you guys. Let's just say that they were tricking us and they got us bumped out in the high tick. Would you do it again? Looking at your large chart? Would you do the same trade again? Here, let me get this out of here. Yeah, here's the other part. If you would have got in at 12 with a 10-tick stop, you'd still be in, technically. Anyway, this is where entry execution does come into play. And again, I want you to think about something. Look, I'm Totally cool. If it lost, it lost. No big deal. Sometimes when they do news, they have a tendency to spike one way. We had crude oil news today. They spiked one way. Sometimes they trick you into going short or going long. That last one loses, and then they turn around and go back the other way. What would it take for us to go short again? Just looking at your small chart. What would it take? I mean, it looks like we got tricked into a short, but that's fine. What would it take? It would take these triggers getting back below and that fib turning red, and then you could do the same short again. Yeah, and it may be a long, a little trickery on. Now, what would it take to do high probability long trades based on your 14-2 chart? Let's talk about that for a second. I want you to think about something else here for a second. Bear with me. You're not going to get any high probability long trades until the small triggers get above this for trend trades. And, we may have put in a bottom here. It's not a big deal. But I want you to see, Sai, you asked the question earlier, how do we know what phase we're in with the triggers? Well, you're in a strong down, strong down, strong down. Triggers are weakening. And then watch how quickly this happens. You ready? You get strong triggers, transition look, weakening look, and then you end up with what's called the range-bound look. And, again, a lot of times when you get a false breakout or something, this is what happens. You get a range-bound look, which means what? The small triggers are going to be physically in between the large and the small, the large and the synthetic. I want you guys to see, again, how it transitions from triggers going up to triggers inside. And look, when they're inside, you bounce back and forth a couple times before you break out. Okay? So, again, look, recognizing on your 14-2 chart where your small triggers are in relation to everything else is going to be important. We're not doing trend trades on the 5-1 chart anymore when it's green, basically. I'll make it more simple for you. This is usually what they call the apology trade right here. You get tricked on a fake breakout, and you get into a range-bound look, and then you get what's called the apology long. So look, right here, they should have gone down based on the rules. They didn't. So usually they're going to switch, and then they're going to say, okay, we'll apologize and give you 20 ticks back to the long side for your troubles. Can you guys see that? And again, let's get some entry timing down here. And maybe they do, maybe they don't. They might go a little lower. I don't want to confuse anybody. All right, so let's ask a question. Our trend trade rules are what? Green background, fib to fib oscillator at the 25, mid bands and fibs for the area, and nothing against your chart, nothing against your trade. Can you guys see that? And again, you get this a lot when you get tricked, where, you go in, and I'm not saying do this, but a lot of times you'll get this, what's called the apology long, and go back the other way. Yes, See it? Look on your 8-2 chart right here. And over here on your 14-2 chart. Yeah, I mean, again, you have to go into this area thinking that you have a range-bound look. Sanjay. So the edges usually in a range-bound look, this would be an edge, and I'd say this is an edge up here. Usually the edges went out. So you'll usually get a pullback to the small triggers, typically. Now, they could keep going down, sure. But we can't do a trend trade short. And usually when the triggers are weakening and inside, the best trades for us, again, you have to be able to spot this look, but the best trades for us are not really in the middle, but from the tops and the bottoms, if you can define a good top or bottom. Now look, this is where, look at this thing. Remember that little test we put together? Again, in this test, it waited for a little more confirmation with a down bar. We didn't get it. So look, this is the 8-2 trigger superimposed on the 5-1 chart. What does it look like? So if this thing gives an up bar, it'll probably give a long signal. Paul D, when you say you can't load a chart for some reason. You talking about a picture? You can't put a picture in? Oh. If you need tech help, get with tech. He'll help you out. All right, so let's recap. First things first. Everything on the planet going your way, high probability trend trades. And again, it all starts with the trigger line looks. Okay? Trigger line look on your 14-2 chart first. If it's strong down and the 5-1 chart, 8-2 chart agree, you're going to do short trades until you run into some type of support or resistance that causes a reversal. And then when everything is going up, you're going to do it going the other way. So when your triggers transition, and again, this transition happens when you get a big gap. So I want you to see something. Let's call this an area, okay? We'll call it area of support that caused the market to bounce and caused the triggers to start to roll. What you'll see is that when you have this big gap back to your synthetic triggers, so it's two-phase. Number one, an area of support, which, again, initially it looks like it's going to break and go down, but it caused the triggers to roll up. And again, you can go out of a range-bound look too, but the short version is we're going to get this range-bound look, assuming that we go up a little bit more. And the other factor that we have is that we have a big gap back to synthetic triggers. And again, this is what, usually you'll see something like this, where people will buy a pullback with the anticipation that you're going to close this gap back to the synthetic triggers. Now, it's not the most perfect look for this, but usually pull back into mid bands, fibs, 1-to-1s. I mean, if it's going to go, that's usually the spot where it goes from. So this is what, again, you're anticipating that this area is going to go up. Now, jumping in like this, is this the best logic for you with your entry rules? Is just jumping in, and again, I do it all different ways. I'll jump in, I'll use market flow. I want you to think about your entry logic. If you have a number one look on all of your charts, it's best just to get in. If you don't have a number one look, again, I still feel pretty strongly that this area might go up, but wouldn't it be better to wait for some confirmation? What do you guys think? Is this a number one look to go long? Oh, sorry. What do you think? It's not, is it? And again, maybe I jumped the gun just a smidge on that range bound look. We didn't quite get above right there, but you guys see what I was talking about, right? Obviously, we're going to need another bar up to get into the range bound look. So they could easily go back down again. And again, typically, when you get a number one look, loss, they usually will go back the other way. We'll see what happens here. I got in on this darn system thing, and it keeps moving my stop. All right, questions, comments, concerns, things you guys want to go through. And again, I want you to see, look, into the future. And forget about these crazy trades against everything. But look, into the future, when we close the gap back to the synthetic triggers, assuming that we do, I want you to see what we're going to hit when we close the gap. This is what this area right here is going to be a very, very major area for us. Multiple Fibonacci resistances and synthetic triggers down strong. Again, here, I'll get out of that long so you guys don't get confused with it. But do you guys see what I'm talking about? This area, I did get out of that because it's just too much against the rules. I don't want to confuse people too bad. Assuming that we get up here, which we should, but we'll see what happens. That's going to be our next major area to contend with. And again, it'll happen in a range-bound scenario, and that's usually where we'll go back up to, and then that will be either your next short or the next breakout. One of the two. Yeah, I mean, again, Sal, it wouldn't be a trend trade short because the triggers are crossed up, right? So to do a trade from an edge or a top or bottom, you need to have this look at the top or at the midband. You need to have a pivot stop out. Because if you don't have a pivot stop out, you know, how are you going to time that entry? Again, I don't mean to get too overly complicated, but look, you see the triggers right here, Sal? When they cross up, you can't do a trend trade short, and you're not really at an edge to do, you know, I see what you're saying here, but the thought process is that you're going to bounce back up, and then 37 will be a better edge from which to do a short. Again, this is a little more advanced than just simple everything going to your trend trades here, but and I don't mean to confuse anybody who's new. When you're new, you want this look with everything going down, this look with everything going down, this look with everything going down. And when it's not all going down anymore like this, stop going short. Now, most traders that have had our software long enough, you know, if you can't go short, they go long. But, you know, again, that's more of a learned skill with time and, you know, being able to recognize the chart. So, look, when you zoom out on the day, or since yesterday, when everything is going up, go long, go long, go long, go long. When everything is going down, go short, go short, go short. Even if you lose one, now we have a mismatch. Sure, we could still go down, but we have a mismatch of our trigger lines. We don't have that triple trigger line strength to the upside or downside. And when we don't have that, usually it's range bound, and usually the edges, the lower edge or the top edge, went out. All right, questions, comments, concerns. And again, you can see this is the lower edge with the triggers rolling, and then this will be the top edge. And, you know, again, not that you can't break out of one of these two areas, but in order to do high probability trend trades, we need these triggers to be more favorable. We need the small triggers to be below the large triggers, and that's just not the case. So look, favorable trigger line for down with them below, maybe even one more there. And then when they get above, you know, you get less easy trend trades. So again, right here they were below, and we took a trade. Granted, I got bumped out on the high, but and then you can see the change in the triggers right here, can't you? Tell me if you don't see it. Not high probability for going short anymore, which means if you can't go short, and you know you're going up to 37, and again, that's why I was going long, but I don't want to confuse everybody. You know, two things you can do. You can go long at the bottom, short at the top. If you get this set up initially, because this is the most conservative version of a setup. There's other things you can do, but, you know, again, stick with the conservative side of things first. All right, who's doing what? Who went long? Who went short? Where'd you do it? Let me go back and pick up pictures that you guys have so we can review. All right, Dave. All right, so you were using the market flow for your entries. So you went short with everything going down and then got bumped out. short again and got out, and then stopped out, short again and got out, short again and got out, short again and got out. It seems to me like you should just take all of your money at the target. It would work out better. Yeah, they're all winners, but it looks like you're giving away a lot of money on all of these things. And then short, and only one time did it break through. It just seems like you'd make a lot more money if you just took it at the target and then took your next short, took it all at the target, took your next short, took it all at the target, took your next short, took it all at the target. You only would have given up like $100 once. Anyway, food for thought. But 2 contracts, they're all winners, 6 trades, 100% winners. And look, this just goes to the testament, and it's a little different version than we were talking about, but it's a testament to trading with the trigger line direction, right? So $1,200 on 2 contracts. Nice job, Dave. But it's a testament to trading with the trigger line direction on the bigger chart. Yeah, that's fun. So what you're saying is, hang on, let me just recap for everybody else. During this stretch, here, I'm going to highlight it. During this stretch with these triggers, you did 6 short trades and all of them were winners. Just to put a visual on it. Can you guys see it? Is it obvious? Hopefully it's obvious. Again, you got to get used to where you're going to get in, how you're going to get in, why you're going to get in, but fibs and triggers, guys. Trigger lines first, give you the direction, the momentum. Fibs tell you when to stop. Triggers rolling up will tell you when to stop. You can see the transition look, right? All right, Siva, let me see what you got. This is the S&P. Obviously, entries on a 3-range chart. I'm assuming your large chart said sell. Sell, out at support, sell through the support. Again, a 3-range chart's pretty small for entry, but I know you trade with the direction. All right, so right now we have no high probability trades. Agreed? There's nothing high probability about what we're looking at right here. Which means, go take a break. I'm going to get the charts reloaded back up again and get myself back to 100% here. Hopefully this lesson, it's the same lesson every day, guys, but hopefully it's just helpful to kind of see all the bits and pieces put together. And when you put them all together, hopefully you'll start to see things pop out at you. All right, so I got all my charts put back together. Any questions before we're done with this lesson here? And again, look, before we would do any more short trades, we'd like to see the trigger line configuration change. And again, before we did any long trades, we'd want to see the trigger line configuration change. So we're not in any danger right now of doing anything wrong. Brings me to one more point. When you guys watch this video for the trading plan, and then you watch this video for trend trades, this is probably the most important video of them all, which is studying. Because you have to really get in here and do market replay. And, man, was my dial-up slow today or what? That's horrible. Maybe YouTube's Having some issues. Studying using market replay. Probably one of your most important tools. In this little video, I go through and I talk about downloading the replay data and really how to study. And what I want you guys to do initially, looks like that crazy system took a long trade. What I want you guys to do initially is I just want you guys to go in and study the charts, look at the looks, and just let market replay play going forward and study the trigger line reads, you know. And again, when you start to see things like, again, this was one attempt at that same spot. This is the second attempt. And again, look, the triggers are much more range bound now. You guys see what I'm saying with this range bound trigger monkey business? This automated system's not going to let me. And again, the expectation is you're going to get up here at about 37. Here, I'll let you see it on this thing. This system keeps trailing the stop every tick, but what do you guys think? I was trying to jump in ahead of a reversal bar at this spot. And again, look, it's the same spot. The trigger line configuration is a little bit better the second time. And this thing's going to run stop so tight, it's going to get bumped out. But does everybody understand this? This is basically trend trade long rules in a range bound market from the lower edge. Does everybody understand this? And again, I think, with our talk of the trigger lines, you can see the range bound look, number one. And you can see where we're going to. And then number two, hopefully you can see the difference in the trigger line configuration here. Again, it's the same one we had over here. It lost a couple ticks the first time because it didn't go, but usually the second time goes. And again, do you feel comfortable enough to take the same trade twice? Stay in your long at 07, so obviously a much better spot. I mean, this system gets in late, of course, but I think 06, 07 was the right spot. I mean, obviously that's why I did it the first time at 06. Ended up losing 5 ticks on the first one when it didn't go right away, and then 06 the second time would, you'd be up 12 or 13 ticks right now. So I think your 07 Stan is really good attempt at that gap closing. And 07 up to, 35, 37, that's a really good chunk of change right there, isn't it? All right, guys, so we're going to take a break for a few minutes before we end the day here. Do you guys have any questions? Is there anything that you guys would like to go through as far as the plan, studying? Again, I think the big study point for you guys is going to come in when you're reading your fibs and triggers. When you read the trigger lines and the fibs and the fibs and triggers line up, the trades are going to jump off the screen to you. All right, no questions? Great. All right, I'm going to conclude the video portion of this. So I did want to record today just so we have a nice little, a good example of the room and, what we teach and how we teach it and a lot of the different concepts put together. And again, hopefully this lesson on, and again, it's just a visual lesson on when the trigger lines come together. So every lesson that we do is the same. It's fibs and triggers, fibs and triggers, fibs and triggers, trend trade longs or edge trade longs, and then that's it. So again, hopefully a good visual lesson for you guys today. I'll save off this video, and if you have questions, again, please let me know.